What is going on, guys? My name is Chase, and welcome back to Intelligent Money Investing. And today, because a lot of you guys have been asking me, I'm going to go through and tell you guys all about the total return of my portfolio and kind of go through these cool pie charts that you can get on the Robinhood web app that show you the breakdown of your stock positions, and it'll give you all sorts of metrics on your total return of all your equities. So, without further ado, let's just hop right into this. And the first chart that we're going to see here is just our stocks and options versus our cash value. Right now, I am 98.85% invested, and then there's just cash sitting on the side. And this cash comes from dividends or Robinhood referrals. They just stocks that I've sold from the referral program. If you guys aren't signed up for Robinhood yet, click the link down in the description. We'll both get a free stock. That is where a lot of that cash comes from, just because I don't really like to sit on top of those really small, like couple dollar stocks that I don't really believe in the companies for. I'd rather just have that in cash. Obviously, this isn't all the cash I have. I have a pretty significant reserve right now to add into my portfolio when there is market sell-offs. But right now, they're $93 in cash. I'll probably save up, maybe buy another share of VOO or something else. So first, we're going to go through the equity positions, and then we're going to talk about my total return and kind of like average cost and stuff like that for each and every one of these positions here. I'll go more in depth on the large ones, and then kind of skim over some of these ones at the bottom. So just to start out, we will look at this pie chart, and as you guys can see on the right here, my top three holdings take up about 50% of this pie of this chart here, basically a pie chart. So VOO is my biggest. I've got $2,168 in equity there with about 9 shares. As you guys can see, it is one of my higher returns. It is but a little bit about $57, $58 in profit there. Then I have SPY, another S&P 500 ETF with a little bit over $1,000 in 4 shares. And then SPHD, that is the monthly dividend, high yielding S&P 500 ETF that I enjoy for a nice monthly dividend. And those three, you guys know I really recommend indexing, and these three take up about half my portfolio, all S&P 500 stocks. So it's going to be pretty big, stable companies that aren't going to move too much, but are relatively safe overall. And then next up, I do have Apple. So Apple, I bought in on this dip as having 3 shares, I believe, making it my largest position, and then I got a free share of Apple from the Robinhood referral program, so that really made this by far my largest individual stock holding, which I really don't mind. I really like Apple as a company, and I believe they have a great ecosystem and are going to continue to be profitable in the future. Obviously, it's kind of turbulent times for them right now, but there's so many different media cycles where everybody thinks Apple is the next Nokia, and everybody has a huge panic on Apple. It sells off, then it ends up going back up again, higher than where it was before. I'm not saying it's going to reach that all-time high again, but what I am saying is that Apple as a business kicks off tons of cash, has a huge cash pile, and really makes incredible profits year after year. I am up a little bit on this. It doesn't include, one thing I should say under this total return tab, I don't believe it includes my dividends. It definitely doesn't include my dividends, and it may or may not include my rewards, because obviously with Apple I got in at a share at about $150, and that is not included in the total return here. But when I only own like 1 or 2 shares and I haven't bought in previously to earning a stock, I believe that it will likely show up as my total return being the entire equity position. So next is VYM, another big dividend ETF. This is another Vanguard one, very low expense ratio. Then I have Berkshire Hathaway as my next position. I really like Berkshire. I believe it's my second highest equity for individual stocks. A really safe company, invested in so many different things that I believe is going to be very profitable going forward. And I'm definitely going to be making a video on Berkshire talking about life after Warren Buffett for Berkshire as a company. Then I have Goldman Sachs. I bought in more Goldman Sachs when it was on its big dip. It had a great day, but I'm still down on that position. Then I have AMT and AT&T, both telecom stocks. DIA is another ETF for the entire Dow. Delta, AbbVie, QQQ, the NASDAQ ETF, Really Income, PepsiCo, Microsoft, Sun Communities, which is a REIT that I really like, Starbucks, DGRW, another ETF, Global X Super Dividend ETF, 2 shares of that, Bausen, OUSA, the Kevin O'Leary ETF, Bank of America, Energy Transfer, which was a Robinhood reward, as you guys can see, up 1403 with only 1403 in equity to overall. So that was nice for me to be able to get a free share of that. And all of these lower ones are also Robinhood rewards. I didn't buy any of these bottom 5 positions. Those are kind of recent referrals that came in, and I'm up a good amount of money on them because I didn't pay any money for them. So let's go over my top, let's say my top 5 overall positions in terms of total return, and then I'm going to go over my bottom 5 in terms of total return. So overall, my top one is SPY. I did invest early in SPY, and I started investing in VOO after I started investing in SPY. So my percentage return is higher. I've been averaging down and up for VOO, so my average cost is a little bit higher in terms of percentage wise by the S&P 500. So SPY has been a good position for me, and obviously as a top returner, it should be based off of it being my second largest position. And with that, VOO comes in at number 2 for total return. Obviously, the higher equity I have in here, hopefully they should be near the top, or else that means they're kind of bad investments relative to other options that I have, just because of how much equity I put in there. If they're not doing as well as lower equity positions, that means I've gotten a much higher percentage return from the lower equity positions. American Tower has been one of my favorite picks so far, and it has really helped me perform well in this big market sell-off. Well, and not really market sell-off anymore, but in a lot of turbulent times in the market, AMT has done really well. It's been expanding very quickly for a REIT, and it's really one of my favorite positions. I kind of plan to add to that one long term, especially with the kind of new technology that's coming out that's going to require American Towers cell towers. Then I have AbbVie up $44 on this position. I used to be up a lot more. I think it peaked at about like $125 a share, and now it's at about $88 a share. So really not bad, but definitely some upward possibilities. And AbbVie is a huge dividend stock, as well as American Tower. Really, a lot of these don't speak to the dividends that I get, and you can see all 5 of these are dividend companies. Then Berkshire Hathaway is at number 6, not a dividend company, but still a solid return from them. Microsoft's my number 5 stock, and when I bought into Microsoft, I believe it was about probably 16 to 18 months ago. I bought in right before a big sell-off back 2 summers ago, and I was just kicking myself thinking that Microsoft average cost at $71 was a horrible price to get in at. And now I absolutely wish I could get back in there now that I've learned more about the business. Microsoft is so diversified, and I think it's going to be really successful going forward. So I'll slowly scroll through here so you guys can peek at my total return for my other positions. Once again, keep in mind that a lot of these are dividend plays, and the dividend yield does not show up. So some of these ones that I'm up or even down on, I don't have dividend yields and dividend payouts included in there. Like AT&T, I'm down $2 on, but I've gotten many more dollars than that in dividends because it does have like a 7% yield right now. It's absolutely insane. DGRW, I'm sure I'm up on. Bowsen, I'm definitely down on. SPHD, I'm definitely up on, but I should be up more considering I have $900 in it, and it is a high dividend yielding stock. But I get about $3 to $4 a month from my position in SPHD, and being down $6, I've owned it for probably 12 months or so. So I'm going to be up about $30 on that. And let's go to my bottom 5. So my bottom 5 are Goldman Sachs, Delta, VYM, PepsiCo, and SPHD. We talked about SPHD already. Then we're going to talk about PepsiCo. Pepsi, I bought in basically at its all-time high. I kind of got excited about their stock. It was kind of early on in my investing when I didn't realize that I need to wait for a good buying opportunity largely, but it is a good dividend stock that I think it's going to grow its yield in the long run. It's very diversified in its space, and it's hopefully going to be a little bit immune to people not liking the soda, sugary beverages quite as much because it does have its snack portfolio and other things like that. Pepsi's organized into the good for you, better for you, and fun for you basically segments in their portfolio, and I think that's going to help them going forward with changing consumer habits. VYM is a dividend yielding ETF. I have a relatively large position in this. I do believe I'm up on this overall if you factor in dividends, but it's mostly flat. A lot of the high yielders haven't performed great, and I think there's some overlap between VYM and SPHD. Delta, I am down a little bit on. I probably will add more to this position. It is a good dividend payer, but Delta's seen a lot of sell-offs lately because I believe it lowered its earnings guidance for this year. So It is down a little bit. I do believe in Delta in the long term, because largely because of the how hard it is to break into the airline industry, and they are earning solid profits now. I do understand that airlines have small margins, but I think that going forward, it's going to be hard to be a big competitor with them. And there's only a few airlines left after so many mergers. So I think that with the duopoly that has formed in the airline space, that Delta is going to be successful going forward and kick off a lot of money to its investors. Then I have Goldman Sachs, which I'm down $25 on. I bought in at like 240 or 250 at first. I think it might have been 250, and that was just a horrible price to get in at. I bought a second share at about 170, so I'm up like $20-$30 on that second share after being down a ton on the first one. So I'm glad I averaged down on that. So I'm up from where I bought in again. But I think Goldman Sachs is going to do well going forward. I think the financials are pretty beat up where they are now, based on the fact that earnings are going to be rising. Berkshire Hathaway is buying big into financials right now, and it's never a bad thing to be doing a little bit of a similar buying that they're doing. If they think that the financials are going to be strong with higher rates, I think that's a solid signal that they are going to perform, and I think they're relatively undervalued right now. Not a bad buy overall. So that's what I've got for you guys today. I hope you enjoyed looking at my good calls and my bad calls. Tell me down in the comments below what your best performers are and what you think I should be doing in my portfolio to improve my positions. What maybe I should get rid of. Everything that you have in the comments below. I love reading and responding to the comments down there. So definitely do that. Leave a like if you haven't already, and subscribe for more content. And I will see you guys in the next one. Thanks for watching.